Disclaimer: this video is for informational and educational purposes only. Nothing in this video constitutes financial, investment, tax, or legal advice. All opinions expressed are personal views only. Past performance is not indicative of future results. Please consult a SEBI-registered financial advisor before making any investment decisions. The creator is not responsible for any financial losses incurred based on information presented in this video. You're still losing money. Same old mistakes. RBI just made it easier to do them, or harder, depends on you. Most of you won't even notice. That's the problem. Look, 25 years I've seen this. People get excited about new rules, then they do nothing or they panic. Then they blame the government or the bank, never themselves. The RBI changes things. It affects your FD interest, your loan EMIs, how you invest. If you don't pay attention, you're leaving money on the table. Or worse, you're giving it away. To inflation, to bad decisions. This isn't about complex jargon. This is about your hard-earned rupees. Don't be the guy who asks me in 2027 why his savings aren't growing. You had the information. You chose to ignore it. RBI announced a few things. They're keeping the repo rate at 5.25%, neutral stance. What does that mean for you? Not much immediate change in loan costs, but it's stable for now. They're also tightening bank lending rules, new norms for capital market intermediaries, full collateral. This means banks might be more cautious. Lending to stock market guys gets tougher, good for stability, bad if you were hoping for easy credit. The big one for you, MSMEs. They're making it easier for small businesses to get working capital via TRADS. Good for the economy, might mean more competition for your business loans. Also, NBFCs and housing finance companies can now participate more in the term money market. This could mean more liquidity, potentially better deposit rates from them, or more aggressive loan offers. Keep an eye on that. Finally, tax rules. New income tax rules 2026. Higher exemption limits for some allowances. Revised valuation of perquisites. Your salary slip is changing. Your tax deductions might too. Don't just look at the gross. Look at the net. Let's break it down. Repo rate at 5.25% means your home loan EMI isn't jumping today. Neither is your car loan. But it also means your fixed deposits won't suddenly give you 10%. The neutral stance means RBI isn't actively trying to boost or curb the economy with rates right now. They're waiting, watching, the new bank lending norms. Less risky lending for banks means they might charge more for loans that are seen as riskier, or they might just pass on the cost of compliance. For you, the average guy, this might mean slightly tighter personal loan approvals. Nothing drastic, but be prepared. MSME access to TRADS is good. It means smaller businesses get cash faster. This can boost their operations. Ultimately, it's good for the job market and consumer spending. Expansion in the term money market for NBFCs is interesting. It means more money flowing into the non-banking sector. This could lead to more competition for your deposits. Look for slightly better FD rates from NBFCs. But remember, higher rates often mean higher risk. Do your homework. The tax changes. This is where you can actually gain. Higher exemption limits for certain allowances. If your company provides these, you might pay less tax. Revised valuation of perquisites. This means how your company values things like company car or accommodation for tax purposes is changing. It could go up or down. You need to check your salary structure, understand what's changing. Don't just assume it's all good or all bad. It's about specific items, right? What do? First, check your bank's FD rates. Compare them with NBFCs. Don't just stick to your bank out of habit. Look for better returns. But read the fine print on NBFCs. Second, review your salary structure. Understand the new tax rules for allowances and perquisites. Talk to your HR. If you're self-employed, consult your CA. Don't let the government take more than it should. Third, if you have loans, understand how the stable repo rate affects your EMI. It's not going up now, but it's not going down either. Plan accordingly. For your investments, the market is always moving. Use tools to track your portfolio. See how allocations are performing. InDmoney can help you consolidate and track all your investments in one place. See your net worth. Understand your asset allocation. Make informed decisions. Don't fly blind. Fourth, if you're an MSME owner, explore TRADS. Better working capital is crucial. Don't miss out. Stop waiting for things to happen to your money, make them happen. These RBI changes aren't complicated. They're just facts. Act on them or don't. Your choice. Subscribe for more blunt truth.